All right, well, recent market volatility and risk of recession is making it a confusing time for investors. Our first guest today is using this period to get into more long-term investment accounts. Like to welcome in now Jill Garvey, Huntington Private Bank Senior Wealth Strategist. And welcome. Always good to see you here. You had some notes earlier, and we'll get into it. I just want to get your big picture overview of some of the moves that we've seen in the market recently.
Absolutely, Jared. Well, certainly yesterday we saw the diamond rally, and today most likely we're going into the snap sell-off. We also saw a growth scare last week where investors were fleeing into bonds. We're very positive on the economy. We see earnings coming in great. The market was expecting 5.2%. We're seeing 9.1%. So we're very positive on our economic outlook. And we are encouraging our clients and certainly investing in the portfolios heavily into equities. We aren't really into the bond scene right now.
Jill, expand upon this a little bit for me, if you would, because as you have seen in the markets, the sentiment around the economic growth is terrible. I think it's pretty fair to say. So what are you seeing economic-wise from data points or, as you pointed out, from earnings that's giving you more optimism?
Well, we certainly don't see this as a worst-case scenario. I represent a large national bank where we're dealing directly on a very intimate level with business owners and individual clients. They still have a lot of cash on their balance sheets. There's demand for our clients' products. So we're really seeing cash available. Clients are sitting on a lot of cash. Demand for services is up. We see the U.S. consumer going from a demand for goods. We're certainly seeing that reflected in the market to services. So we're seeing a lot of positive indicators in addition to the trends that we're seeing with retail sales. The numbers from last month came in very well, and we see a lot of jobs being added and new entrants into the market.
And Jill, you were just talking about this not being a worst case scenario. Looking through your notes, you have an interesting juxtaposition between two questions you're asking. What if something goes right? And then what if everything goes wrong? Just explain your reasoning there and how you're seeing it.
Absolutely. So what's going on right now is we have persistent hot inflation. We're also watching central bank responses. And then we have the surprise of what happened earlier this year with Russia, and then the China situation, which is providing a lot of constraints to the supply chain. So to have all of those four key issues go wrong, that means stocks would go lower, bonds would go lower. However, if one of those go right, we see that it could be a great summer, great half of the rest of the year for stocks and bonds. So that's what we're focused on right now is our summer theme.
And what about in terms of sort of more specifics here, in terms of sectors or other ways that you're shaping your strategy?
Absolutely. Right now, we like energy. We see that the companies that we're investing in are using a lot of discretion with their capital, and they're giving cash back to shareholders. So we have a dividend focus right now. I'd like to highlight that. Number two, we're looking at healthcare. We can see nice growth in the companies we're purchasing in that sector without a lot of the tech volatility, although we still do like big tech. And in the tech space, we're looking at the payment processors. And then we are focusing more on consumer staples versus consumer discretionary. And that's just certainly given what we saw last week with Walmart and Target. And we know that people still have to go out and purchase toilet paper and paper towel as an example.
Yep, still need all that stuff. Jill Garvey, thanks so much. Huntington Private Bank Senior Wealth Strategist. Appreciate you joining us today.